Hello, good morning. It's Tuesday the 21st. I'm FX Blue and this is the market brief from my feet today. Unfortunately, the air wheel ran out of juice. It looks like the longer term investors, hedge funds and strategic traders are all still a little bearish about sterling. That would certainly explain why there was very little reaction to Andy Haldane's bullish chat yesterday. He piped up to say the economy is in the middle of a V-shaped recovery and he thinks that we've already recovered half of the fall in activity caused by lockdown. Granted, this is not the consensus view of the MPC, and yes, he glossed over both the unemployment issues and the high street woes, but he told MPs that he believes the economy has been growing at about 1% per week since the government started to lift lockdown. And that's pretty punchy stuff, even if Marks and Spencer's are about to bin off about 1,000 middle managers. But yet the reaction was limited. And the longer term outlook is no doubt affected by China, which of course continues to threaten dire consequences from ditching Huawei, and our good old friend Brexit. But while domestic employment, China and Brexit are all helping to keep a pretty firm lid on sterling gains, support meanwhile is forming around the 125 mark against the dollar. And yesterday we closed up towards 126.60. Over in the US, Mnuchin's been on. He's outlined the administration's view that federal aid needs to continue helping those whose jobs have been hit by lockdown. The man on the street surviving on $600 of that weekly payment needs that help to continue when the current aid package comes to an end. And we should get clarity over any replacement before month end. Weekly jobless claims over in the US remain stubbornly high, and that means that the dollar is drifting a little. It may even take Friday's activity data to help kickstart the market once again, because the broader view is one of confusion over COVID and whether the rising infections and increasing death toll represent a second wave yet. Behind that, of course, there's also the upcoming election. If the results are COVID affected, with perhaps an unusually low turnout, do you think a legal challenge to the result will hold up this time around? Who knows? In the Eurozone, in the end, the solution to that pandemic relief fund was pretty simple. Why not just split the fund between loans and grants? Please a little bit of everyone. While the details of course still need to be agreed by the finance ministers, many heads of state have hailed the success, unity and forward thinking of the outcome, conveniently ignoring quite how long we've all been waiting for this decision to have been reached. Any issues from this first time issuance of common debt? Well, that can wait for the longer term. For now, it will no doubt be gobbled up by the market, as essentially it helps offer Italian debt yields with a German guarantee. What is not to love about that? The market accepted the deal and the euro reacted pretty positively to the short-term clarity. We saw euro dollar touch 114.65 on the day. Right, that's it from me today. Have a wonderful day. I'm off to charge the air wheel, so I'll be back wafting around again tomorrow. Join me then, please. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.